The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We're going to start out the day like we always do here at 100 South Broad Street, Philadelphia, Pennsylvania. And we're going to look at that DAX on the 4-hour chart. You can see that 61% retracement just setting there as neatly as can be. But the really interesting chart, folks, is the next one because it's more or less a intraday trading chart, but it's got some really good patterns here. As you can see here, we've had a really nice 135 pattern on the bottom today. We had a really nice rally on that. That rally went from 115.65 all the way up to 116.10. That's quite a bit, folks. That's a lot more than we see in the S&P. Now you see that we're in this triangle that's there where there's a potential 135 on the upside, and that's how a triangle is formed, by the formation of these different triangles. So we're at a really critical level here in the in the German DAX, but it has a slightly bearish bias because of the longer term trend is down from that high we made on Monday. Remember, this is a 15-minute chart. It's really for short-term trading, but it's lined up perfectly. And as you can see, the triangles which define what these cycles are forming right where they should be, completing at these important Fibonacci numbers that we look at. Now, they don't always work this way, of course, but this is one that we're really focusing on this morning. Quite interesting. If we take a look at the FTSE on the 4-hour chart, you'll see that it's been a little stronger today. We've had a nice move back up near that high at that 72.60 level. This is a 4-hour chart, so it's taken well over 8 days to get up to this level. So it's holding in there really, really nicely, and that's what you really like to see. And then when you're looking at that, you want to do the same thing with the FTSE like we did with the DAX, and that is go into the smaller time frame, either the 15-minute or the 30-minute, and then you'll be able to see the clear ABCD pattern. And as you can see on this chart, I think the most important thing that you should walk away with is the fact that if you look at the bottom there on February the 28th, that beautiful 3 drive to a bottom with the ABCD, the 1.618 expansion, that pretty much told you that was the bottom. You had a really strong rally, a pullback to the 61% retracement on the 4th, and from there you went up today and completed that ABCD pattern up there at that 72.20 level. So this is, following along technically pretty much like we expected. But frankly, sometimes they work, sometimes they don't. We don't know that. Had 2 questions this morning about positions that we've been talking about for quite some time. We review this one for our good friend, Mr. Z, in the room. This is the British pound. We'll bring this up so we can look at it here. You'll notice that we completed the ABCD pattern up at the 1.27 level at that 133.30 level. That was a place where we were looking to go short. The high was 133.38, so it went 8 pips against us. Right now it's trading at 31.30. As you can see, we're down below those lows from the area of February 11th. We're still higher than that level, but we still have, you'll see the pullback level of the 61% retracement is going to bring us into that 133 level. So we're still 100 pips away. We're up about almost 200 pips. Well, we are up 200 pips on it right now, but we're looking for it to get down to that level of that 130 level. Now, the way we would handle this is that you would have your stop about 100 pips away from where we are right now. That would lock in profits quite nicely, but you'd have to give some back if you don't reach that level. We're a little bit oversold. We're down 4 days in a row now in that British pound, so we're due for a little bit of a rally. The $64 question is, if we're going to get it, how much is it going to be? But right now, since our game plan is to cover the short at 130, That's what we would be looking at. So whether that's going to be the right thing to do or not, we don't know. But remember, that's an unknown. We have those 4 fears that we have to worry about, and they really don't mean anything. The fear of leaving money on the table, the fear of being wrong, the fear of missing out, all those things, you know, folks, those are unwanted fears because we have no control over theirs. This things that related to the market. I mean, you have to do it. I mean, this is it's all about speculation and risk control, and that's what pattern recognition does. Is it helps quantify the risk that you're looking at. You know, that's the really key, you know, to be watching. Here's another one that we've had on the radar for quite some time. We'll bring this up here. It's been rather bearish. This is the Australian dollar. This is the daily chart going back for quite a while. What I'm going to do this morning, bear with me here 1 second, folks. What I'm going to do this morning is to update this chart to show you where we are this morning, because it's also starting to work relatively nicely, and we are getting down to where the price objective could be hit at any time, because we're only about 60 pips away. That's less than 1 day's trading if the market moves like it usually does. Now, if you look at this Australian dollar really closely, you'll notice the big rally that we had from January the 31st, you know, went right up, it was January 31st, sorry. It went right up to the 78% level up there at that 72.80 level, but we didn't get above the 73. If it got above 73, it had a chance to be pretty bullish, but it didn't quite do that. Now we're making the first ABCD Gartley on the downside. If this has really turned, if that big move that we made back on the 31st of December has held, and that looks like it is, this is the first ABCD pattern we've seen in a month. And Gartley said on page 223 in the book, 222, 223 in the book, he said, whenever you see that, he called it the retracement pattern, and whenever you see that pattern, which is the ABCD, that's what you're looking for, folks. The real difference in the Gartley book, and this is something, you know, the book was rather rare. You know, it cost $1,500 back in 1937. I had a copy of it from my good friend Don Mack. I studied a lot, but the real key was on page 221 and 222. He described this pattern, and when he described it, he had 2 little diagrams at the top of the page. The problem was, on one of the diagrams, he only showed a retracement. In other words, the move would go up to AB and pull back to the BC level, and he said, you know, to buy that swing. He didn't say anything about Fibonacci numbers. I'm sure he didn't know them. If he did, he never told anybody about them. But the other diagram that he did was the perfect Gartley. In other words, where you make an X on the bottom, rally up to A, down to B, up to C, and down to D. That's what we're seeing in the Australian dollar right now. So he had those 2 things there. The description that he made really, you know, told me that he really wanted to do that ABCD, because that was the real key, because you had so many ratios and so many price levels coming in at this at the 69.50 level in the Australian dollar. So that's why it's so very important. You know, all I can tell you is, folks, they don't work all the time. They do work some of the time. You have to decide which you're going to trade, how much you're going to risk. That's what trading is all about. Take the responsibility for doing it and just get it done. We'll be right back. 877-927-6648.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, we're back. We're going to take a look at this Canadian dollar here. You put up the chart of the weekly chart that we've been following for a very long time. This has probably been, well, hands down, been the best one for us. That and the euro this year and last year, the year before that. But the Canadian has been very, very productive as far as hitting the numbers that we're looking at. As you can see, the big sale came in at that 136.60 level. The high, I believe, is 136.68. We came all the way down to that 131 level. You can see it spot on at that 61% retracement level, down 5 days in a row. We've had a really good rally here right now, and as you can see, we are continuing higher. We've taken out the highs of February, and so it's looking like we might get up to that 61% retracement up there at the 134.40 level. Now, I don't usually do this, but what we'll do here is we'll take a quick look here. Well, I do it, but I don't do it on air very often. But we'll take a look here at these markets here for this Canadian dollar. You can see the ABCD would be forming there, and that would be the first ABCD since the first of the year. Because we topped in late December, and this would be the first significant ABCD up there at that 134.40 level. Whether that's going to be the case or not, you know, we still have to wait and see. That's the main thing that we're looking at here in the currencies. We've had some questions here this morning about the grains. What I'll do here in the grains is I covered this in the newsletter for the futures this week, and nothing's really changed. We've had 3 days. The wheat has held up relatively well, but that's the one that you know, that went right down to where it should have stopped. It shows a slight profit right now. The low was 448. We rallied up to 464, rallied 17 cents off the bottom. Now we pulled off a little bit this morning. We're trading around 459. If you bought that, you certainly don't want it to get below 448. That's the one that I would be watching very, very closely. Now, when we're doing corn, we've got two options to work with. One is we got the new crop, which is not planted yet, and we got the old crop, which is the old demand. So I think probably the best thing to do is look at the new crop, because that's the one that would give us the best possibility. And as you can see here on this, when we had this first part of this new moon that we had, we went down on Friday. We hit that 78% level spot on at 388. We've had a pretty good rally, 8 or 9 cents higher, so it's holding that rally relatively well. But this is the beginning of this product doesn't even exist yet. It hasn't even been planted, so there's a lot of unknowns about it, and so this is why we're following it the best we can as we look through some of these things. A poor post, what does that mean, a poor post? Let's look and see what they say here. Let's see if that helps a little bit. Maybe I don't know what I'm doing, and that's always a possibility. Let's see. Good. There we go. All right. Good. The DAX is getting up there. Good. That DAX means it's probably breaking out of that triangle to the upside. I don't know what the price is, but that was one of the ones we were watching this morning. Watch it real closely, because it is breaking out to the upside, and that's a pretty good thing to look at. The other one. We've covered the wheat and the corn. They all look about the same. I don't believe that, the year is really got set up for a possibility of some really bad weather, folks. We've had 4 years of really great weather, and that's not really happened. If you remember last week, it was more than last week. It was late February. We were talking about this possibility. It's right at that number right now. Thanks, Mark. That's great. That's exactly where it's at. Let's just quickly look at that DAX in just a minute. But let's look here. You'll see here, this is the cotton. We made that double bottom back there on about a month ago, and we're now getting up near that 75 level again. So cotton is starting to move up a little bit. But let's move here and just quickly look at this DAX again, because I believe 1650. Yep, we're right up here. Let's get it up here. You'll see that German DAX has got up to this level, and we're moving up to the upside here. You'll be able to see it easily enough, I think. And let me know if that chart came out the way it should have, because 1650. Yeah, we're getting ready. Yeah, that's a good move. See, we did take off of that 135 pattern, did move up to the upside, and then it's going good. All right, as long as that chart is working okay. That's the $65 question. Now, Mr. Z is letting us know that today we have a new moon at 11:05 a.m. We also have Mercury is going to start retrograde period. If you remember, we had Tim Bost on, and he talked extensively a couple weeks ago about this particular pattern, and we also had Norm Winsky on yesterday that talked about this particular pattern in the Mercury retrograde area. So this area that we're looking at here on the 6th is very, very important. That's what it looks like to me. All right, let's go back to the gold market, because that's the one that I think has the chance today for a rally, and I'll explain that just a little bit. Before I do that, I want to double check the price to see if we've held the 382 level, 1280, the 1282 level in the gold, and I see we are at 1287, so we are holding that level relatively well. Folks, the one thing that you want to remember here is that when we're dealing these patterns, and I repeat it over and over again, that they're only probabilities, they're never certainties. So that's something that I think is important. Let's just get back to this gold where we were last week. I want to just bring this up because we've come down to the exact level of two harmonic numbers. You'll notice at that level, you'll see the 1282 was the low. We didn't have that in yet because it happened on Monday, but the key point here is it went from 1351 down to 1282 and change. That is $68 per ounce. That's the biggest correction we've had in the last 6 months. It's also a 382 retracement of the low way back in October of last year, and it's 2 harmonic numbers down. That's the key from my perspective, because this thing, it really follows these numbers, folks. 34 is the harmonic number in gold, 1/2 harmonic is 17, and a double harmonic is 68. So, I mean, this is a low risk. I mean, below 1282, you don't want to touch the gold, but at that level right now is hit spot on, yesterday, and so you got to pay very, very close attention to it. So now the key for us is we don't know whether gold is going to be longer term bullish or bearish, but this will tell us. After this $68 correction, we're going to see if it has a rally, and if it has a rally, it's going to do it in ABCD format, and that's going to be the one that you want to be watching. Regarding that, you remember we were talking about the bonds yesterday, looking for a little bit of an ABCD pattern in the bonds, and we've seen that pretty much this morning. It was almost to get to that level. We missed it by just a few pips, and of course we still can do that today. But if we look at the German Bund, you're going to be able to see that same little ABCD pattern in the German Bund that we're looking at in the Treasury bonds. So, like Twentyman says, defy human nature, do the work yourself, and go in and look at that 30-year Treasury bond and see the ABCD pattern, because that's going to be a very low-risk potential, because if that's the first rally back, we'll be able to see that level. So we'll see what happens. Yes, that 11650 was very important in the DAX, as we pointed out on the chart. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I posted one of my favorite teaching tools and my favorite slides. It's a picture of a slot machine. It happens to be the, I believe it's a double gum machine, if I'm not mistaken. I used to have several of these. I bought them as antiques many years ago and sold them over the years, but this one is from the early 1950s. But anyway, if you look at this slot machine, it really describes what trading is all about. Because if you look at this machine, nowhere on this machine does it say you have no chance of beating me over the long term. No way on that machine, nowhere on that machine does it tell you that I've taken in more than $1.2 million that I've given out. What it's showing you is all these bells and whistles that if you hit the 3 7s, you're going to win 500 coins or whatever it happens to be. It doesn't tell you the key thing to realize is that how much you have to risk to try to play the game. And it's okay to play it. You put your $10, $20 in, you might get lucky. That's okay. But longer term, you can't beat it. So it's the same thing in trading. You have to think in terms of what the winners think. Winners think how much money I can lose. Losers think how much money I can win, and that's the whole premise of how Las Vegas is based. It's based on the flashing lights, the lure of big wins, and that's what it's all about. And you realize that you're in there to try to take a little piece of it, but you can't beat it very, very often. Remember, a gambling game is nothing to do with speculation. Speculation comes from the Latin word speculare, which means to observe, and that's what we're doing with these patterns. We're observing these patterns. That's the edge that we look at, and that's what we're trying to do. A gambling game in the gambling industry, which is huge and getting bigger and bigger because all the states now are doing sports betting, and that's going to be a very interesting pattern for that too, because they're the same pattern in sports betting that you see in the markets. But with the markets, remember that you have the ability to get in and out in a matter of seconds. In other words, if you bought gold just about 2 seconds ago, you decided you didn't like it, you can get out. You can't do that in a sports betting environment or in a gambling game. In a gambling game, it's based on an event that you have no control over. Repeat that. It's based on an event that you have no control over. The gambling game starts with the toss of the coin, the spin of the wheel, the roll of the dice, the toss of the ball. All of these things, start the gambling game, and it goes to the end without you're being able to change your bet. Now they have proposition bets that you can go to the first quarter or the half time and change the bets and do that. But that doesn't change the event. It goes to the very end, and that's how it all ends. With trading, you can get in and out. You have control over what you're doing. You don't have any control over that. That's why, certain gambling games like poker and baccarat, poker, and what's that, backgammon, have certain skill games that you're able to use your skill to determine when you want to play. When you're playing poker, you can decide, which 5 cards you want to play with, and if you don't have good cards, you don't have to play. So it's the same thing with, with trading. If you don't want to play, you don't have to. That's basically it. My strategy today coming in was I was looking for a potential bottom in the gold market, and I'm still looking. And if I see a spot here where it looks like it's going to hold this 1283 level, I'll probably go long with a stop right below that and look at. Also the crude oil. The crude oil's got a really strong support down there at 55.50 a barrel, and I was looking to see if we can get it down to that level. Also, the S&P on a rally to see it, because we had a pretty big sell-off of 15 points because we're in low volatility right now. So if we get rallied back to that 27.95 level, that would probably be a good shot to maybe nibble at the short side. But again, that's just all based on a short-term pattern. When longer-term patterns are the ones that we're looking at in the currencies, and those are the ones that are, you know, giving us the big payoff now because they lined up so perfectly intraday too, you know, several weeks ago and days ago when we put those on. So it's all about pattern recognition, and it's all about risk control. It has nothing to do about how much money you're going to make, because you never know how much money you're going to make, you know, when you're doing it. That's why when we talk about those 4 fears that we have all the time, it's really I didn't do any buys in meal yet. No buy in meal at all. Our only buy so far has been in the wheat. It's working a little bit, but we've not done anything in the meal yet. We just missed the buy in the November beans. But remember those 4 fears: the fear of being wrong, you're going to be wrong a lot. The fear of losing money, you're going to lose some money. The fear of missing out, you're definitely going to miss out, because the only way you're going to miss out is because you're either sleeping or you're not going to be trading that day. And the fear of leaving money on the table, get used to that one, boys and girls, because that's the silliest fear of all. Because think of that: the fear of leaving money on the table means you're going to get the high tick or the low tick of the move, and that doesn't happen very often, believe me. And I do a lot of these things, and I don't get the high tick or low tick very often. Sometimes you can come close, but that's neither here nor there. So try to get over those fears and do the best you can. Someone's asking a question of why some of these things look so bearish on the gold market. I'll give you just a little bird's eye view here, and I wanted to talk about Sam Zell too, because Sam Zell, one of the smartest investors we have here in the United States, from Boston, he's very, very bullish gold. So you know, Sam is a real shrewd dude, so you want to be watching here. We might get a terrific buy here in gold. But you notice here on the bull bear index for gold, we hit that perfect 61% retracement up there about 6 to 7 days ago. We've had a really strong correction, so we are oversold coming into today, and that's why I'm looking for a potential buy in the gold. But if we look at the get this up here, and we'll take a look at this here. This is the gold silver index. You're going to see the same type of pattern as the bull bear index, and we're coming down strong. So we are very oversold. I'm looking for a little bit of a bounce here in the gold today. In fact, if we get that key level of 1283 is very important, because of the fact that you have that double harmonic number there, and also the 78% retracement of the silver of the other move. One other one I wanted to mention to you is this is some work that we did long time ago, but this is only about the full moons in gold, and I wanted to bring these up to you know, to show you these the full moons that we have going on in the gold. The only problem is, if you'll look at the bottom here on the bottom page, you'll notice that what we're coming into now in the gold is right at that little red dot, which means that's a new moon. And the new moons work very well too. It's just that it's a 14-day cycle. So, you know, silver and gold run in those 14-day cycles. So we're right over one right now. Whether it's going to be a bottom or not, you know, I don't know, but it should hold 1283. If it doesn't hold 1283, then you know, that's it. But realize you're trading a $126,000 contract, and you can trade it with under $500 risk. That's pretty good. I mean, you know, you stop and think at some of these others, you know, you have to risk a little bit more, especially now the NASDAQ. I mean, the NASDAQ is, you know, that thing is the pork bellies of the stock index futures. So that's a really wild one. You get it right, you make a lot of money, and if you get it wrong, you've got to narrow your loss down very, very quickly. So we'll see that. Anyway, you're right. Mr. Zell over at Sam Zell is one smart cookie. I've been watching him through years and years, and he is a really smart dude. So pay attention to that boy. We'll take a little break here. We'll get back, and we want to cover a couple of stocks like Tesla and Apple.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal full-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour. Next on TFNN.
All right, folks, we're back, and we're going to take a look at Tesla first, and then we'll take a look at Apple. You can see Tesla's been all over the map here since September. Made a double top, of course, in July. You'll see the ABCD pattern that was right there, spot on, showing that was most probably going to be some resistance. That happened to be a double top, and then it also made another top back in December. That's a triple top. That's very, very negative. But where we are right now, you'll notice that over the past 3 or 4 weeks, now actually the past 5 weeks, we've made a beautiful 3 drive to a bottom pattern exactly at the 78% level yesterday at 273. As long as we stay above 273, I think you've got a pretty good chance of actually above 270. The low yesterday was 269 and change. We're trading about $8 higher than that, but that is a completed pattern. Whether it's going to hold or not, we don't know, but nobody else does either. So that's a key one to pay attention to. I wanted to bring Apple to your attention also, folks, because these FANG stocks have not been doing well on a longer term basis. There's no question that they're having some type of a serious problem here. But let me get the Apple chart up so that we can where did you go? The old disappearing Apple trick. Aha. Thank you very much, Mr. Chart Patterns. Let me see where they are. Golly gee, Red Ryder, this is not much fun when I do this. I just did it. Ah, here it is. It jumped out at me. There we go. It was hidden underneath the trading manuals. Hold on here. You'll be able to see. Here's the Apple long-term weekly. You can see the big patterns that we've had way back in 2013. Nice bottom, 2016. Perfect 61% retracement. Then we had the big move up. We had you'll notice that the pullback that we had back in December the 26th, right at a 61% retracement with low 2016. And now what we've done is over the past 8 weeks is we rallied up to a 382 retracement of the Apple. Now this one is far, far weaker than the rest of some of these other stocks that we're looking at, like Boeing, that went up and made new highs substantially. So the FANG stocks are dragging behind a little bit on the market. Not much, but enough to pay attention, because these were the leaders. These were the leaders that we were watching. So sort of pay attention to that. It's going to be really, really interesting to see if it's going to go through and hold that particular area. Very important, I think, to look at it. The other one that we really are following closely here is the natural gas on the commodity front, because it continues to move a little higher. The bottom that we had in natural gas, you'll see the beautiful cycle bottoms that we had there. Those are nothing more than 50-day, 100-day, and 150-day cycles. As you can see there, they're pretty much spot on. Now, they usually will only last 2 or 3 times, and this is 3 times. So that 150 or 50-day cycle will now either contract or expand into the next move. What we're trying to do is to see how it's going to rally from here. We got up to that 290 level. Haven't checked it yet today, but we've had a pretty good move off of the bottom, which was at 255. I believe we were on the air when that was happening a couple of weeks ago, and so that's really important support there. And also the fact that it's right at the 61% retracement of the low that we made back in 2016. That's pretty much what we're watching. Folks, I have a question here about these grains. We're starting planting intentions. Some people are planting, I'm sure, where the weather's thawed out back in the Midwest. They'll start putting the grain in the ground very, very shortly. But by the end of Lent, here in about another 4 or 5 weeks, these grains will be planted, and that's when the fireworks will start, because we've gone 4 or 5 years without any bad crops at all. And believe me, folks, we're only 1 crop away from famine, because if we had a really super bad crop in the United States, like it happens once every 10 or 15 years, we'd be looking at disaster in some of these areas that really need food quite a bit. Someone's asking me a question about Venezuela. All I know is Venezuela is in South America, and it starts with a V. I don't know anything about the politics other than it's a socialist country in big trouble. But remember, Argentina was in trouble a few years ago, and they worked out of it, and so did Brazil, and they seem to be working out of it. Whether they can do it or not remains to be seen, but it's in the news a lot, so it probably moves the markets a bit, so we'll wait and see. Someone's asking a question of why is Sam Zell bullish? I don't know. I just had the TV on mute, and he was explaining that he thought gold was going to go up to quite a bit higher. Now the DAX has turned red. Thank you very much. So that pattern stopped exactly where it should have on the upside at 116.50. Is it trading below 115.75 yet? Maria, if you'd let me know, I'd certainly like to see that if it has. I'm not able to pull up DAX prices while I'm doing the show here because it interferes with they're 1598, so it's backed off about 50 points. The key one there is if the DAX gets below that 1550 level now, that would be at that. You just had that false breakout, and now you're going to be heading down. So we'll see if that's going to be the case or not, but it's still a little too early to tell whether that's going to work or not. Oh, I wanted to thank you folks for the nice response I got yesterday from the show about Norm Winsky, and also the one from Bill Meridian on Monday. These folks do a great job with their cycles, and it's fun to have them on because it's a different perspective. Astrology is not an easy thing to grasp, but these guys are pretty good at it. I've always said that someday you're going to see a segment on CNBC or Bloomberg, 10 or 15 minutes, where they're going to be talking about the astro cycles that are out there. Remember, in Dr. Andrew Lowe's book, The Evolution of Technical Analysis, he spent the first 50 pages of that book describing that the first technicians were actually astrologers from Sumerian, Babylonian, 5 and 7,000 BC, where they talked about Mercury with wheat and the full moons and the new moons. So it's very, very, very interesting to read some of this stuff. But believe me, I've been doing it a long time. I've searched for the Holy Grail a lot, but I never did find it. What I have found is that these patterns that we rely on these cycles works relatively good, and it helps define the risk. If markets go beyond 1.618 levels, they're probably going to go a lot higher. So it's just support and resistance. Remember that slot machine, folks. You don't know when that handle is going to be able to give you any nickels or dimes or whatever it happens to be. But remember, you can only put $20 in because that's your risk. So if you lose your $20, you got to wait till you get another $20 to do it. You just can't feeding money. If you remember, about 10 or 15 years ago, the Las Vegas came out with slot machines that took credit cards. If you remember that, that lasted exactly 1 year. Because the studies that they did on that showed that these people just literally decimated their credit and their accounts by just using all of their money into a slot machine. They couldn't control the amount of money that they were betting. Great for the casinos, really bad for the patrons. And finally, the patrons, because of a lot of pressure that they got from Gamblers Anonymous and a few other firms, that they had to stop that. Now, you can get credit, but you have to go over there and just like you were going to get a loan for a bank, and they're very tough on that. Whereas before, you just had to put your credit card in, and if you had a $1,000 line of credit, you could run that through in about 10 minutes. So it's we'll see. Okay. Okay, we'll see. And we'll take a little break here. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, someone's asked a question about the support and resistance in the E-mini S&P. The real strong support is at 2760. Below that, we're looking at 2740. We pointed those out in the newsletter, of course, this past week, and it looks like we have a chance of, we're trading 2782. It's only 20 points away from the low we're looking at, but that's certainly a possibility of doing that. So that's the main thing. I did want to, we had a question about Bitcoin. I wanted to bring this to your attention because this has been what's happening over the, hold on one second here. You'll be able to see. You'll be able to see here the long-term picture over the past several months here with the Bitcoin. And you'll notice this a daily chart. So you see the Gartley pattern that formed there at 3,300. We had the rally up to 4,200. That was your, 41.95 was the high. 78% level came in at 41.80, and now we backed off. And all we're doing now is we're at a 50% retracement of the low that we made back in February, and it's actually held that 20-month line, as you can see, relatively well. Whether it's going to continue to do that, we'll have to wait and see. Remember that line from our friend Jim Twentyman acts as a fulcrum that pushes prices higher. And the key is you can't close below 3,700. If you close below 3,700, that's not going to be that's going to be invalidation of a 20-month line, and that's not what you want to see if you're bullish. But right now, it's acting relatively good. That would set up the ABCD pattern to come in up around 4,600 a share. Now, that's slightly lower than we made back in December of last year when we were trading at 19,500. But the fact that we've held these levels is relatively important. Remember, the long-term ABCD pattern in the Bitcoin ended up at 3,800. We went lower than that. We got down to I think we got down to 2,900 during the big debacle in December. We'll be back tomorrow, folks. Live every day in an attitude of gratitude, and may God bless.